Hello class 11th students. So today in this video we will discuss GST chapter and its journal entries. Now if I talk about basic things in GST, that is what is GST, what is its origin, why it came into force, when it came into force, or what is CGST, SGST, IGST, I have discussed in my short videos, and here are these short videos. If you want to know more about everything like that, you can watch these videos. Now the purpose of this video is to teach you journal entries. But before moving further with the journal entries, I again want to discuss some very important topics. Now, the first thing that I want to discuss with you all is that GST is a supply based tax. It means that GST is charged when goods and services are supplied. Goods and services are supplied. See, GST is an indirect tax that is charged on supply of goods and services. Now, what does this mean? It means that GST won't be charged when goods and services are purchased or goods and services are produced, but it will be charged when goods and services will be supplied by the producer to the consumer. Now, see, now for instance, this is a producer and this is our consumer. Now GST will be charged when goods will move from producer to consumer. Now let's move further and talk about some very important things. First is GST rates. Now when we talk about GST rates, there are different GST rates for different products. Now when we talk about essential items, that is necessary goods, like milk, grocery items or medicine, the percent of GST charged for these goods is 5%. For essential items, GST charge is 5%. Now we will move further to standard goods or standard services. Now standard goods means like mobile phones, furnitures, ACs. In case of all these goods, 18% GST will be charged. Or for services like, for example, Wi-Fi service, 18% of GST will be charged. Now moving further to very luxury items or tobaccos, 40% of GST will be charged in luxury items and tobaccos. Now, luxury items could include luxury cars like Audi or tobacco products. Now, we are moving further to a very important topic, that is input GST and output GST. And I think the students face most of the problem here only. Now, what is input GST and what is output GST? Now, let's take an example to understand this. Suppose there is a company, Reliance Fresh. Okay, now before selling products to ultimate consumer, Reliance Fresh purchases it from the manufacturer. Now for instance, Reliance Fresh have bought goods from the manufacturers for rupees 10,000. And here the GST rate is 18%. Now while purchasing these goods, Reliance Fresh has to pay 10,000 cost and 1800 GST to manufacturer. This is known as input GST because this GST is paid when we have buy goods and services for our business. Okay, so here Reliance Fresh will pay 11,800 to the manufacturer, and this will be known as input GST. Now moving further to output GST. Now Reliance Fresh will further sell these goods to customers. Now for instance, Reliance Fresh has sold the same products to customer for rupees 18,000 and the GST rate is 18%. So at 15,000, 18%, GST rate will be 2,700. Now the customer will pay 15,000 of selling price and 2,700 of GST, that is 17,000 in total. Now this 2,700 will be treated as output GST because this is the GST which the company has collected from customer on selling of goods and services. For instance, we are a company and we are buying goods from manufacturer. While buying goods from manufacturer, we have to pay manufacturer the amount of GST, and that amount of GST will be known as input GST. But when we will sell the same goods to the customer, we will collect the GST amount, that is 18%, from the customer. That will be known as output GST. Now the main thing is that how this adjustment took place of input GST and output GST. Now think, when Reliance company has bought goods from manufacturer, they already have paid 1800 of GST amount, and when they sold the same goods to the customer, they have got 2700 of GST. So what do you think? They will again pay the whole 2700 amount to government? No, not at all, because at the time of buying goods, they already have paid 1800 amount. So this is the adjustment. The input GST at the time of purchase was 1800. the output GST at the time of sale was 2700. Now the ultimate payment that will be made to the government at the time of sale will be 900. That is 2700 output GST minus 1800 input GST. Now let's move further to practical question. Now I have made a practical question where I will be solving 8 or 9 entries with you, and मेरा purpose ये है that main entries आपको यहीं पे आ जाएं. So let's start with these transactions. Now see the question. Pass entries in the books of A and B company assuming that all transactions have taken place within the estate. Now you all know that whenever the supply of goods happen within the estate, then CGST and SGST is charged, and accordingly in the question the CGST and SGST rate 9% is given. Now moving further to the first transaction. Bought goods for 5 lakh from Ram Bros. Now you all know that whenever we purchase goods, then the entry pass is purchases account debit to bank account if we have bought goods on cash, and if we have not made immediate payment, then the person from which the goods have been purchased is credited. So now just see what is the simple entry of this transaction. The simple entry of this transaction will be purchases account debit to Ram Bros. But remember, here we are passing journal entries for GST. So whenever we will purchase goods, we have to pay GST. Here the journal entry will be, first of all, we will do purchase account debit of 5 lakh because we have done purchases of 5 lakh. Now on 5 lakh, if we take out 9%, it will come 45,000. Means buying 5 lakh goods have attracted 45,000 of CGST and 45,000 of SGST, which we have to pay to Ram Bros. So purchases account debit 5 lakh, input CGST 45,000, input SGST 45,000. The total payment that we have to make to Ram Bros will be 5,90,000. So this is the first basic journal entries at time of purchasing goods. Now moving further to the second journal entry. Goods sold for 8 lakh to Meena and Company. Now we have made sales of 8 lakh to Meena and Company, and at the time of sale, of course, we will collect GST. Now whenever we do sales, the basic journal entry we pass is, in this case we have sold goods to Meena, so Meena and Company to sales account. But here we are doing GST. Now we will not only collect this 8 lakh rupees from Meena, but along with these 8 lakh rupees we will also collect the amount of CGST and SGST. So the journal entry passed here will be Meena and Company, from whom we will take 9,44,000 of cash of payment to sales. We have made sales of 8 lakh. On 8 lakh, 9% of GST means that 72,000 of GST, which we have to take from Meena and Company. So Meena and Company account debit 9,44,000 to sales, to output CGST 72 and output SGST 72,000. Now let's move further to the third journal entry. Okay, I have already told you that GST is a supply based tax and GST will be always attracted when goods are supplied. Now the third entry is paid for printing and stationery. So here we are taking some stationery items. So we are purchasing some stationery items. Of course GST will be attracted, and we are purchasing 10,000 of the stationery item. So at 10,000, 9% GST amounts to 900. So here the journal entry that we will pass is printing and stationery account debit, input GST account debit, input SGST account debit to cash or bank. So the total payment here we made is 7,800 after including CGST and SGST of 900. Now moving further to the next entry, here we have bought furniture for office use. So the journal entry passed here will be per furniture account debit, input CGST account debit, input SGST account debit to bank. Furniture account debit 50,000, on 50,000 9% of GST 4,500, SGST 4,500, and the total amount is 59,000. Now the main journal entry is next, that is drawings. Now think, if we have withdrawn certain goods from our business for our personal use, will GST be attracted? Yes, GST will attracted, because Here we are assuming that the goods are supplied from the business to its partner, and as you all know that our business is always that a company is always treated as a separate legal entity. So according to that, drawings made by partner will also be treated as supplier. So at the time of drawings, the journal entry made is drawings account debit to purchases account, because here we are withdrawing the goods. So here we will do drawings account debit to purchases account, and along with that, on these goods we will also pay 9% CGST and 9% SGST. That will amount to 900. So drawings account debit 1100, to purchases 10,000, CGST 900 and SGST 900. Now moving further to the next journal entry. Here we will do three things. We will understand trade discount concept, cash discount concept, and after that we will see how much GST should be charged. See this. We have bought goods from Krish and Company 4 lakh. So if we will see the basic journal entry, it will be purchases account debit to Krish and Sons. But the two things that we have to take into account is that these goods have been bought at 10% trade discount and 3% cash discount. Now every commerce student know that we never ever record trade discount in the books of account. So the trade discount will be ignored after deducting the amount. It means that we will deduct this 10% from 4 lakh, but we won't show it in the journal entry. So now after deducting this 10% trade discount, the amount that is actually left is 3,60,000. Now we have to take this 3% cash discount, but you have to see this very carefully, that we are just doing purchases here and not making any payment right now to Christian Sons. Nowhere in this transaction they have mentioned that we have made any payment to Christian Sons, and cash discount will always be attracted at the time of making payment. So when we will make payment to Christian Sons, we will deduct this 3% of amount at that time. So when this time we will do the entry, we will do the entry with this 3,60,000 amount. It means that we have made the purchases of 3,60,000 from Krish and Sons. Now at this 3,60,000 we have to pay 9% CGST and 9% SGST, which will amount to 32,400. So here the journal entry will be purchases account debit, that is 3,60,000. After deducting that trade discount, CGST of 9% on 3,60,000, that is 3,400, SGST 3,400. Now this amount of 4,24,800 which we have to pay Krish and Sons, this will be paid after deducting the 3% cash discount that has been mentioned in the entry. So the next entry is sold goods to Nanak Bros for 2 lakh at 20% trade discount. At 20% trade discount and 5% cash discount. Also we will deduct the cash discount at the time of taking payment from Nanak Bros. So after deducting the trade discount of 20%, it means that deducting 20% from 2 lakh, we will get 1,60,000. So here the entry we will make with 1,60,000. So the entry passed will be Nanak Bros account debit. Nanak Bros account debit to sales. Sales we had made of 1,60,000, and on 1,60,000 9% of CGST 14,400 and 9% of SGST 14,400. So the total amount we have to take from Nanak Bros will be 1,88,000. Now I told you earlier, this 5% of cash discount will be recorded at the time of payment. Last entry, in the last entry they are saying A and B company to make the final payment of GST. Now the question is, how will we calculate this final payment of GST that has to be made by A and company to the government? Now see all the transactions that we did. Okay, so coming on the transactions, we have to only focus on the GST amounts. Okay, so coming on the first transaction, the amount of input CGST is 45,000. Now let's first take the total of input CGST. Okay, so input CGST, the first amount is 45,000. Input CGST at the time of printing and stationery is 900. At the time of buying furniture is 4,500. At the time of making purchases from Krish and Son is 32,400. 82,800. The same amount will go to input SGST because the rates of CGST and SGST were same. Now the main thing is to add output CGST and output SGST. Let's add output CGST now. Okay, so the first output CGST was 72,000. Then at the times of drawing it was 900. Then at the time when we made sale to Nanak and Bros it was 14,400. छुट्टी है. सुनो सुनो, आज भी छुट्टी है, कल भी छुट्टी है. कल भी है. मैम को टाइफाइड हो गया है तो हमने 2 दिन की छुट्टी ली. ठीक है. Of output CGST is 87,300. Input CGST same amount, 87,300. Now see what has happened. While we had paid GST at time of purchases, we had paid in total 82,800 of GST, and while making any kind of sales we had 87,300 GST. Now GST is not any type of income from A and company. It is an obligation that has to be paid by A and company to the government. GST payable will be equal to input CGST that it has collected while making sales minus output GST that it has already paid while making purchases, 87,300 minus 82,800. So the GST obligation here will be 4,500. 4,500 on CGST and 4,500 on SGST. It means the total obligation payable will be 9,000. Okay, so I hope you understood that while making purchases we will pay some amount of GST that will be known as output GST, and while making sales we will collect some amount of GST from our customer which will be known as input GST. Now the GST payable will always come after deducting the inputs GST, output GST. In this question the input GST was 87,300 and the output GST was 82,800. So the total obligation of CGST was 4,500 and similarly SGST was also 4,500. So the total amount payable was 9,000. Now let's come to the journal entry which we will pass. Now as we calculated the total of output CGST was 87,300, output SGST 87,300, and input CGST and SGST was 82,800, and the difference that was coming was 9,000. So this is the difference which will go to bank, which will be make to the government. I hope you have understood these general entries, and if you want to take regular classes from me, all the details have been given in the description below. Thank you.